Hi, y'all. Thanks for joining us. Today, I'm being joined by Alex Dykes of Intercoastal Mortgage, who is my own personal lender and my clients' lender. Thanks for joining us today, Alex.
Yeah, thanks for having me, Ashley.
So we are going to chat today about Fannie Mae and Freddie Mac adding a rate penalty to second homes. Can you explain to us a little bit about that and how that'll impact our current market as well as Smith Mountain Lakes market as well?
Sure. Yeah. I mean, obviously it has a big implication on the Smith Mountain Lake market, but we've also seen a lot of second home purchases in the Roanoke Valley and surrounding areas too, especially with retirees that are ready to buy now and aren't quite ready to make the first huge move. So basically what Fannie and Freddie have decided is that in order to slow the amount of loans being insured by Fannie and Freddie and be able to slow the market a little bit, they have decided to add a rate penalty, or what's called a loan level price adjustment, to all second homes. They last year, if you remember, did this to investment properties during the height of the refinance boom. However, their intention this time is to continue to provide affordable housing. So they've decided to only target second homes, and essentially it's a tax on people with higher income, because anybody that can buy a second home is generally a higher qualified individual. So in order to keep the investment market open and stable, they have not done anything to the investment market. So investment homes are still good to go. Primary residences are still good to go, but really we're just seeing that rate increase on all second homes.
Great. Now, not to put you on the spot, but can you give me just an estimate of what that rate penalty might look like for a certain second home purchase?
Yeah, of course. So we're seeing anywhere from 0.5 to 1.5% penalty as far as what impacts the client's rate on second homes. And what it will eventually do is end up either pricing investors out of the market, second home market. So investors will start pulling out because they don't want loans in that credit bucket, and they don't want to have to deal with the penalties that are being added. The investors that do remain, the traditional investors, their pricing is going to be so high that it won't likely make much sense for people to purchase second homes.
So when considering our Smith Mountain Lake market, is this obviously then going to slow the second home sales market at Smith Mountain Lake for at least until they take away the rate penalty?
Yeah, I think it's going to have an effect for the conforming and conventional loan market, right? So anything that doesn't qualify as a jumbo loan, anything below that 640 threshold, that's the new conforming loan limit for this year, those homes are definitely going to be impacted, because you are, your private investors, which I'll get into in just a second, those are not going to give any options for that price market. So yes, I think that is going to suffer in that range. However, the good news is that many homes at Smith Mountain Lake are well above $640,000. So when you breach that conforming loan limit and you get into the jumbo market, we're playing in a very different field, because we have a lot of flexibility when it comes to private jumbo investors that are not held to Fannie and Freddie guidelines. So, just to give you a little bit of an example, in the conforming limit for a 30-year fixed second home, I'm seeing upwards of the high 4% range right now. In the jumbo market for the same second home, I'm seeing 2.75 with no points at a 5-1 arm. I'm seeing 2.875 on a 7-1 arm, and as low as 3.250% with no points on a 30-year fixed for jumbo.
Okay.
So, I think it's a double-edged sword. It's really going to hurt some people, but not everybody.
Okay. And Intercoastal Mortgage has some jumbo and private loan packages that our folks can access and use to make those second home purchases?
Yeah, we have about 30 to 40 jumbo and private investors that we can pick from. And, everybody has different rates because everybody prices what they want to buy. But in general, I think, we're not dead in the water when it comes to the second home market. We just have to be a little bit more flexible and creative.
Great. And can agents reach out to you and inquire about this before their clients are asking them?
Please, I would love that. I would love to have a conversation with anybody, whether we've worked together or not, or whether we will work together or not. I love just being here, and I love talking about this stuff. So anybody's, feel free to reach out to me at any time.
Perfect. Thanks so much for the information. And as always, I appreciate you.
Yeah, thanks, Ashley. I appreciate it.
Sure thing. Bye-bye.
Bye.